Amazon just reported their latest earnings report, a beat for the quarter, slight miss on Q2, but overall, a pretty impressive quarter, top and bottom line. I'll start off with a couple of comments from its CEO and president, Andy Jassy. It was a good start to the year across the business, and you can see that in both our customer experience improvement and financial results. The combination of companies renewing their infrastructure modernization efforts and the appeal of AWS AI capabilities is reaccelerating AWS growth rate, now at $100 billion annual revenue run rate. Pretty amazing. Our stores business continues to expand selection, provide everyday low prices, and accelerate delivery speeds, setting another record on speed for Prime customers in Q1, while lowering our cost to serve, and our advertising efforts continue to benefit from the growth of our stores and Prime Video businesses. It's very early days in all of our businesses, and we remain excited by how much more we can make customers' lives better and easier moving forward. Pretty insane to say that when this company is probably on track to generate $1 trillion in annual revenue by 2030. More on that in just a second. But as you will see, these results basically show that Amazon is probably a perfect business. It can operate extremely well in good times, but it can also operate very, very well in bad times. So let's say the economy is doing bad. Where are you going to shop? The place that offers the best service at lower prices, right? This is exactly what Amazon was built to do. Good and bad times, an extremely well-run business. Now, with regards to Q2 guidance, so net sales are expected to be between $144 and $149 billion, or to grow between 7 to 11% year over year. In the first quarter of 2024, the impact from leap year added approximately 120 basis points to the year-over-year net sales growth rate. Operating income is expected to be between $10 to $14 billion, compared with $7.7 billion same quarter last year. Now, as for the beats and the misses, or the miss, AWS revenue beat by 3.7%. They beat EBIT estimates by 38.5%. Yeah, this is not a typo. Beat revenue by 0.5%. Beat GAAP EPS by 15 cents. But Q2 revenue guide missed by 2.3%. And these were the analyst estimates before they reported earnings. So as you can see, top line growth of around 10 to 11%. Bottom line growth growing much, much faster. And so at this rate, $1 trillion in revenue, yearly revenue by 2030, it's going to be quite something to look at. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Very, very close to reach 40,000 subscribers. So hit that subscribe button. It's free. You can always unsubscribe later on. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, earlier today, they did announce something new, or not new, but an update. So AWS announces general availability of Amazon Q, the most capable generative AI-powered assistant for accelerating software development and leveraging companies' internal data. In short, Amazon Q is the most capable generative AI-powered assistant available today, with industry-leading accuracy, advanced agents capabilities, and best-in-class security that helps developers become more productive and helps business users to accelerate decision-making. AWS offerings just continues to grow and stays best in class. Now, with regards to this quarter, so online stores sales grew by 7% year over year, physical stores by 6%, third-party seller services increased by 16% year over year, advertising services increased 24% year over year, subscription services up 11% year over year, AWS, again, a reacceleration here, up 17% year over year. I believe the whispered numbers were around 15% or so. So a nice beat there, and again, showing the strength of AWS. As for operating income for AWS, that's up, 82% or so year over year to $9.42 billion. So that's, again, quite something. But then I want to show you something with regards to free cash flow and operating cash flow, because that's also, it's mind-blowing when you look at those numbers and how fast they have grown year over year. So they gave us here trailing 12 months numbers, same with the presentation. So operating cash flow, trailing 12 months, is up 82% year over year. 82% year over year growth in trailing 12 months operating cash flow, close to $100 billion. If you look at free cash flow, also trailing 12 months, same quarter last year was negative $3.31 billion. We're now at over $50 billion. So yeah, again, I'm losing words to describe how amazingly well run this company is. And no, there was no announcement of a dividend. I know there was someone with a sort of a leak, maybe a Photoshop picture of a Bloomberg terminal saying that, oh, there is an Amazon X dividend date, but no dividend. And thankfully, there is no dividend because I do think that first they have to buy back shares. And then eventually, when they have so much cash, so much money on the side to buy back shares, you do a Meta or Google, Alphabet, and you issue a dividend. But I think that's not going to happen anytime soon. Prove me wrong. Prove me wrong. Then lastly, with regards to the stock, like I said, it's up 2 to 3% or so. Can probably move tomorrow. There's also Jerome Powell speaking, plus the call. Maybe they're going to tell us something more positive, less positive, that will affect the stock. But overall, we're now in between the 20 and the 50-day moving average. The 200-day one sits at $154.61. So overall, what more can I say? Amazon, one of the best ecosystems out there, one of the best companies on the planet that can operate quite well, can thrive quite well in good, but especially also in bad times. In case we're going to enter a sort of recession, if interest rates stay high, they don't cut the rates in time, GDP goes down, unemployment goes up. I mean, stuff can get bad quite quickly. A company like Amazon is definitely not going to go out of business anytime soon and can definitely operate very, very well during tough times. Good quarter, profitability side of the business keeps on getting better and better and better. It's my second largest position. I really have no negative comments other than a weakish Q2 guide. Other than that, again, an elite quarter by this amazing company. But of course, do share your thoughts down in the comment section below. Yes, I will cover AMD. Yes, I will cover Lemonade and the other companies in the next few hours or maybe tomorrow. So stay tuned for that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.